Hello everyone. Welcome to Hot Forex webinar for the 3rd of May 2017. Today I'm going to try to cover in this webinar Andrew's Pitchfork indicator. It's quite a rare indicator actually, and how we could use it, how we can gain from it. However, before we start, I need to know whether anyone is listening. You have any audio issues or something? Can you give me a feedback? It would be great if you could give me feedback of the sound, because we sometimes have some audio issues. Great, thank you very much for your feedback. So if you haven't, since you confirmed that you can hear me clear, if you have any other audio issues during the webinar, please check your settings on your computer or device, or let me know through the question window. And if there are any questions you would like longer explanation for, please email us directly to webinars@hotforex.com. So, however, before we start, I need to go through our disclaimer warning. This material is provided as a general marketing communication for informational purposes only. Nothing in this communication contains or should be considered as containing investment advice or an investment recommendation or a solicitation for the purpose of purchase or sale of any financial instrument. We make no representation and assume no liability as to the accuracy or completeness of any information provided. We shall not be held liable for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Risk warning: trading Forex and CFDs may not be suitable for all investors and carries a high risk to your capital. Trading such products is risky and you may lose all your invested capital. That was our disclaimer. However, so let me introduce myself firstly, since it is the first time you hear me probably giving a Hot Forex webinar. I'm Andria Bihidi, Stuart's colleague and market analyst here in Hot Forex. I have studied 5 years in UK and awarded with a bachelor in mathematics and physics and a master's degree in mathematics as well, and postgraduate diploma in actuarial science. I have recently actually joined Hot Forex team as a market analyst just in 2016. However, prior to that, I was active in the Forex industry for the past few years. So my mission, and in general our mission here in Hot Forex, is to actively help you in becoming better traders and deliver daily accurate market reviews as well. So today, as I mentioned, we're gonna look, as I mentioned earlier, the Andrew's Pitchfork indicator. First, I will try to explain what is it about, show you how it can be drawn in the MT4 charts, to give together the various elements that can be provided, such as the possible support and resistance levels. However, before we go through and start our main body of the webinar, I would like to know how many of you guys have actually used that indicator before. If you could give me feedback. Or I would like also to know whether you are a trend trader as well. So Saleh has used it all the time. Khaled never used it. You're a scalper as well. Okay, not used it before. Okay, so we have trend trader, never used. So some people use it, some not. Some are intraday traders, some I suppose a longer terms as a daily one. I'm new to it as well. So okay, that was good. So let's start. As I said before, we could cover the background of Andrew's Pitchfork. What is it? How can be used? How we could monitor trends using this indicator? How to set support and resistance levels using it, and adding triggered lines to the Pitchfork. I know that might be sound quite weird, but we will explain it later on. So I will avoid, to be honest, spending much time on the history of it. I will simply mention that Andrew's Pitchfork indicator was developed by Dr. Alan Andrews in 1980s, which of course was the name after, and it looks like a pitchfork, like a farmer's pitchfork. That was actually why it was named as Andrew's Pitchfork. So Dr. Allen wanted to create this indicator which looks like a pitchfork, because he wanted to identify and put in a borders, let's say, the deviation from the main path of the market in an effort to better deal with the spillage of markets from the core of the trend. However, the history of it is back in 1901, and it is based on Newton's third law. So I study mathematics and physics. I couldn't start my first webinar without having an indicator that was based in physics and third Newton's law for action and reaction. Sorry guys, I could not ignore that fact. I wanted to mention it as well. So back then we had businessman Roger Bacon who applied the third Newton's law of action-reaction to stock markets and introduced to us the normal line, the straight normal line. So after that, that normal line, that straight line was Bac's way to chart and predict time of prosperity and recession. So afterwards we had a friend of his, chartist George Marechal, as I mentioned in my slide, which actually took that normal line and gave us the median line, which is simply a clear deviation of Bac's normal line. Later on we have the final appearance of Andrews Pitchfork by Alan Andrews, who took the median line and added what we know today as the upper and lower parallels, which are lines extended from point B and C. So if you see in this picture over here, A line, which is from this lower low over here, this is the median line, and we have these pivot points over here, B and C, and they are extensions which are parallel lines from the median line. So that's why we have this format of Andrews Pitchfork indicator. However, let's focus to more technical stuff, which I think we are more interested in. So Andrews Pitchfork is a trend monitoring tool. That's why I asked you before who is a trend trader or not, because if you are a trend trader, this is a very useful tool for you. It gives you like many useful information, such as possible market reversal prediction, as well as helping you to enter the market in the right time before market retrace. But in my opinion, the most important one is the fact that when the market is on an up or downtrend, it can help you detect a price channel at which the asset moves in and notifies you for any market correction. So it helps also to provide you a possible support and resistance level of the asset that you want to trade for. So importantly, helps you, as I mentioned, identify possible market reversal, detecting your price channel, provide you possible entry levels before the market retrace, provides you a possible support and resistance level as well, and possible market corrections as well. So Pitchfork is constructed by three parallel lines, as we said initially. So it's the median line, the upper parallel, and the lower parallel, which also indicate potential support and resistance levels in the market. However, let's have a look how we could draw this indicator in our chart. Let me bring my MT4 and the Aussie cat. This is the Aussie cat chart. Let me remove them. I have already drawn it, but I will, because I want you to see how I draw it, I will simply delete that and draw it again. So here we have the Australian dollar, Canadian dollar 4-hour chart. Let me put the 4-hour one. Sorry. So here we can see, like, the latest trend that we can see this chart is this uptrend over here. However, if you have like a general look of it, here we have an uptrend, downtrend, and an uptrend again. So in order to construct the Andrews Pitchfork on your chart, you simply firstly and more significantly need to identify the move of the pair. So I will focus to the latest one, and it is clearly an uptrend. So since we have an uptrend, we are looking for 3 consecutive pivot points. If I go back to my slide, if we have an uptrend, we are looking for 3 consecutive pivot points, which would be a low, a high, and a low, like in this picture over here. So we had that low pivot point, high pivot point, low pivot point again. If you had a downtrend, however, that would be the vice versa. So you will start with a high pivot point, a low pivot point, and a high pivot point again. Let me bring back the chart. So I'm gonna draw it right now using these 3 pivot points: the low over here, high over here, and the low again. So we simply insert Andria's Pitchfork indicator, click on the turning points over here, again here, and here again. So we have our Pitchfork indicator drawn as well. So we could, as you can see, it seems to satisfy actually our trend. So it's from this point onwards, it seems to move within this channel. So we can see like the median line, which is exactly in the middle of these 2 pivot points over here, and the 2 parallel lines created by our pivot high and pivot low over here. So how we could use, however, Pitchfork in terms of trading? A simple way of that most of the people follow, and most of us actually follow, is consider the upper and lower parallel lines as their potential support and resistance level. Hence, in this Australian dollar CAD daily chart, let's go to daily one, because I want to put a bigger, I want to I'll put an indicator as well in this graph. So low, high, and low again. Again, we have this uptrend. So if we're looking this uptrend, we could consider the upper parallel to be our resistance, and the lower parallel over here to be our support. However, this is a very simple way of using Andria's Pitchfork, while we could derive much more information using this tool. So if you have a close look to the Australian CAD daily chart, which I also have in my slides, let me go back over here. So it's the same, exactly the same time frame and pair that I was showing you just now in the MT4. So as we could see, as you can see, we have a support down in the lower parallel and the resistance at the upper parallel. However, a significant step that we need to follow once we're using the Andria's Pitchfork indicator is to confirm the trend. So how we confirm the trend? The trend. We confirm it by validate the fork. How we validate the fork? It is important to check whether it's indeed moving during this price channel that the Andria's Pitchfork indicator gave us. How we could do that? Simply by checking whether the support levels and the resistance levels are indeed satisfied. So what we can see actually here in this chart is that we have this support area over here, which is our lower line, hit it twice. So it's actually considered to be a strong support. So it was hit initially here and again here. So we can see that the pair actually hit the support area and then tends back to the median line, close to the median line, went down again close to the median line again goes down to support area. It didn't manage to break the support area, but reversed and went back to the towards the median line, let's say. So it means that since we confirmed the support area over here, we have a valid trend. We have an active trend, trend. So we could use it depends on your time frame, of course. You could use this lower and upper parallel lines as your potential support and resistance area, let's say, not levels. We could not stick in this exactly on it. It depends of if you want to go long or short in an uptrend, or it depends on the uptrend or downtrend, or if you are looking for a long or a short position. So since we confirm that indeed the trend is active and the Pitchfork indicator is valid enough, our next step is, in my opinion, to find a trading opportunity. So the best way for me is to trade on the direction of the fork. So since the fork is giving you anyway the direction, so this is an uptrend, it's better if you trade in the direction of the fork. And what I mean by that is, like, since this is an uptrend, once this support area was confirmed, you could simply go long. That simple as that. And depending on how it performed, you could simply set your stop loss, profit target, and etc. So let's have a look again in the Aussie CAD, and I will bring back the MT4. Let me bring back that. So this is clearer, suppose, for you to look. I'll zoom in as well. So as we said, support is confirmed over here, so we could enter the market with long position in this situation over here. However, we need to confirm that. So you cannot like enter the market exactly on the first candle. You need to confirm the area, right? That indeed the support is confirmed. So by these 4 consecutive up candles over here, and this break of the 20 Bollinger Bar, 20 period Bollinger Bar over here, you can confirm that indeed the support was satisfied, and you will surely going long in this area over here. So if you're using it's good to use actually another indicator just to confirm the results of what you can see in the Andria's Pitchfork indicator. So let's have an example. Since this is confirmed, we're looking like for a target near the median line. So if you enter the market, let's say in this confirmation of the uptrend over here, you could go, I wouldn't put my target actually on the median line. It's too risky, because as you can see, the pair over here is close to the median line but never hit it or broke the median line. So if we enter the market in this area over here, I will put my target around here, which, as you can see here, or actually lower, it depends on your time frame. You're an hourly trader, a 4-hourly trader, or a 50 minutes one, 30 minutes one, it depends. So if I was trading right now and I was in this area over here, I will put my target in this area over here, which was heated 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It was hidden many times. Or the next target will be in this area over here again, because it was hidden again many times. So it's likely my trade to be successful, since we will have an uptrend. As we can see, like live over here, the asset went up, didn't manage to go closer to the median line. However, it seems that we'll have a tweezer tops over here, so it's possible to go down to the support area again. However, we need to confirm that with another candle at least, or if you are going like in a 4-hour chart, if this continues, is very likely to go down and possibly hit close to the support area, which is our lower parallel line. So this is how it's in general and simply way Andria's Pitchfork indicator can be traded. Like we need to have in mind that potential support and resistance level can be the upper and lower levels. In my opinion, it's better if you trade in the direction of the fork, and to have in mind also always that price tend to settle close to the median line and bounce off to the outer parallel lines or the channel lines, whatever. So, is there? We have some questions. Sorry, not making higher high uptrend is ended. Can we use it with any time frames? So, sorry, Gazi, I didn't understand what you actually was asking. Not making higher high uptrend is ended. I didn't get that. If you're referring to the pair that I was just showing, please can you retype your question? Sally, can we use it in with any time frames? I have that in my recap slide. Actually, it's better if you use it in a higher time frame, in longer time frames, such as daily, monthly, weekly, or at least 4-hour one. Not, I believe, is not accurate in a shorter time frames. In general, all the indicators, as the shorter time frame you're using, as the less accurate signals are giving. So it's better if you stick to a higher time frames. So Aussie cat not making higher high uptrend is ended. Let me put back. It was a daily one, right? You were asking for. Not making higher high uptrend. So you mean that it didn't manage to reach the upper parallel, right? Is that Gazi? Is that what you're referring to? That it didn't manage to break the median line and moves within the upper and median line over here and made a higher high? Yes. So yes, indeed, that wasn't the case. So you could consider the median line as a resistance in this particular example. However, I will go back and show you this picture over here, which, to be honest, I'm not sure which pair was it, which in this area over here it was close to the upper parallel. So it doesn't mean that it will always be between lower and median line. It's a channel, so it will be between upper and lower. You might, if you find that it keeps a resistance in the median line, you could use that as a resistance, the median line, I mean. If not, it will be the upper parallel. So in this picture over here, you could see that it keeps the support over here many times actually, and then it breaks the median line, went up close to upper line, down, used as a support the median line, and is up again. So we could consider like a stronger resistance. We could consider the upper parallel instead, and not like in the example that I just showed you, where we have, sorry, I will maximize this, where we have the asset moving between the median and the lower line. That's why I believe that it's better if you trade in the trend in the pitchfork direction. So it would be risky if you enter in this area over here in the potential of going up and breaking the median line, or in the so since this is confirmed in the lower, since support is confirmed in the lower parallel, is better to wait for the confirmation I said and go up close to the median line. So let's continue if you don't have any other questions. So anyway, if you have any other questions, just put it on the chat and I will try as soon as possible to reply to you. So this is how we draw our Andria's Pitchfork indicator. Confirmation steps need to validate the fork to confirm that this is an active trend. Trade in the direction of the fork. If you want otherwise, you need to compromise the risk of it, and to have in mind that price tends to settle close to the median line and bounce off to the outer lines. However, as we are aware, every one of us like that is trading every day, markets are changing direction all the time. So the price that goes down eventually will go up, and the price that continues going up eventually will go down. So that's why, as I mentioned earlier, Andrew's pitchfork helps us also on identify a possible reversal of the trend. And as an example, I have this Aussie dollar 4-hour chart, where we could see that the price was moving between the median and the upper parallel. So it hit it the upper parallel many times. It considered to be a strong resistance, and then it hit back the median line, didn't manage to break it, so it was quite a strong support and went up again. However, if we see this area over here, we had a break of the upper parallel and our resistance. So before I actually put some comments on the breakout and how we could trade with it, I'd like you to know that if the price channel, if this the price tends to settle close to the median line but didn't manage to break the median line, so we have a failure of the price to break the median line, this indicates to a weakness of the trend. So that's therefore, if we have this weakness of the trend to move within this price channel, then it might lead to a possible breakout. So we have to have in mind that if the Andrews Pitchfork indicator does not fully satisfy, like in the first picture that I have over here, does not fully satisfy our trend, and it keeps having a failure of the price to break the median line, then we might possibly in the future have a breakout. So support could be on 20 period movement in Australian cat daily. Oh, okay. Okay, I'll come to you guys later on. Just a second to cover the breakout and trend reversal topic. So I will put back the charts. So here we have Aussie dollar, the 4-hour one. It's the same that I was presenting over here. So that we said that the price tends to settle close to median line. So we possibly, in a failure of the break in the median line, we possibly have a possible breakout, which we had indeed over here. So if we want to trade that breakout, we need to be very, very careful, because this breakout does not actually mean straight away that would be a trend reversal. It doesn't mean that from a downtrend it will conversely be an uptrend. We need to confirm before we enter the market, because we might have a correction over here, like here. So if we check this chart over here, we had a resistance in this area, in this pivot point. The asset was moved down to median line, supported with 3 consecutive sessions in the 4-hour chart, hit it back the resistance area over here, break it above, and it was overbought for 7 consecutive sessions over here, but it didn't manage to continue going up, so it went back to our channel and our Andrews Pitchfork indicator. So this could be a confirmation, a correction of the trend, since our even if it was overbought, it went back to our price channel, our Andrews Pitchfork indicator. So before we enter, if we notice a breakout, it doesn't necessarily mean a trend reversal. It might mean a trend reversal or a correction of the trend. So we need to confirm that. How we could confirm that indeed the pair actually is changing direction, and from downward trend it simply will go uptrend, is by using the trigger line, this line that I put over here. So since Andrews Pitchfork is giving us a possible trend reversals, in order to confirm that, we put these trigger lines over here. So just to hopefully I haven't confused you. Yes, breakouts are indeed risky, Gazi. That's why we put some more elements to it to help us and to confirm this breakout. So by putting this trigger line in this area over here, which is actually the trigger line is a trend line from initial point. So in this downtrend is a trend line from our point A, which was the pivot high, to to the peak, to the next peaks. So we had a peak over here, and here, and confirm as well. So it's the connection of the point of the high of the point A, let's say, because we might have an uptrend or a downtrend. So it's the connection of the point A to the peak for a downtrend. This is called, in this situation, in this picture over here, that we have a downtrend, this is called an upper trigger line. So in order to confirm the breakout, our asset, once it breaks the upper parallel line, and so our resistance level, the only confirmation that we could get on going long, and in order to have a trend, because we believe in a trend reversal right here from downtrend to an uptrend, is simply if we see our asset breaks this area over here. So this is not 0.7550 level. So if it continues upwards and breaks this level, then we could claim that the pair is likely to go uptrend, is likely to follow uptrend, and therefore we could go long on this situation over here. However, this is why breakouts are risky. I will bring MT4 again to give you to see. So this is the same chart I was showing you in the slides. So we had the downtrend over here, break in this area over here. We set the trigger line, but if I continue, it seems that it holding this trigger line, didn't manage to break it, so it's going down back to the price channel. So we actually had a big correction over here. This area was a big correction of the trend, like this area over here. It wasn't actually a trend reversal. So that's why you need to be careful and always confirm the breakout before you enter the market. So breakouts are risky. Yes, exactly. They are indeed risky. That's why we always need to confirm them. So I know that my charts are quite stick on the downtrends. That was the most updated charts that I found this week. So I wanted to show you an updated chart. However, the same principles, the same steps must be followed either if you have an uptrend or a downtrend. So the trigger lines in an uptrend would be simply simply the same way, but the trigger line would be from point A to the lowest point, and we'll consider be the lower trigger line. So a possible direction, once we see like we see over here in this Aussie dollar 4-hour chart, is like if you're looking for a long position, then you have to ensure that the pair managed to break the upper trigger line. If it not, go short back to the price channel. If you're in if you're in an uptrend, so you are looking for a short position, break below lower trigger line can confirm a short position for you. So let me so that was actually all from me. Hopefully I didn't confuse you. Hopefully you like the information that I tried to pass to you. And before I ended this webinar, I'd like to show you what a very good chart for price for trend reversal. So we had in January 2017, the Aussie Canadian dollar 4-hour chart, which was a continuous uptrend up to 21st of March. Then the trend was downtrend up to April, and now it changed its direction to uptrend as well. And we're now looking if it managed to break this support area over here. So that's a typical trend reversal chart. So that was all for me. With this webinar, we have just to summarize everything. We have covered Andrew's Pitchfork indicator, which is a trending indicator, and can help you identify possible channels and possible price reversals. It is constructed using 3 consecutive highs or lows of the asset. It has 3 parallel lines provided that could be used as a support and a resistance areas. Price always tends to approach median line and bounce off the outer lines, and it's more accurate, in my opinion, to use high time frames for this indicator, and especially to be combined with another tool just to confirm that the signals that we are getting are indeed correct and more accurate. That was all for me. Please let me know if you have any further questions regarding our today's webinar, or in general, how can I help you? Thank you very much, Gazi. Thank you. So no further question, guys. No questions. Okay. Until we are to confirm that no one has a question, I will simply present your Hot4X application. It's a very good tool to have in your mobile phone, since you'll have live streaming of market rates, daily market analysis, and useful overview of trading position, and much more, since everything almost that is in our website it will be are also in our Hot4X application. So it's every one of us using his mobile phone, so it's a useful application to be downloaded to your phones, and in order to have a fast track to everything regarding Forex and Hot4X news as well. Our forthcoming webinars will be a live analysis for Alvaro Mariño. So if you have any currency pairs that you want Alvaro to analyze, and in general you have any question regarding any pairs that you want, you could simply send an email to us, or at the live analysis you could chat Alvaro and ask for pairs that you want to cover. We have during the month Elliott Wave analysis again from Alvaro Mariño. Stuart will be back and give two live analysis on 16th of May and 23rd of May. And mind games of trading and multiple time frame analysis. So have these webinars in mind. It will be very useful to have a look at them and to hear them. They will always give you may make you a better trader than worse. So it's better if you register and try to have some and find some time to hear them. That was all from me. Thank you for watching. Have a great day ahead, and hopefully see you later again. See you. Bye bye.